Hey guys, welcome to our weekly news show here on Backstage with Millionaires. I'm Caleb, your host, and as always, there's a lot of news to cover this week, so let's jump right in and start off by talking about this resurgence in India's peer-to-peer lending space. There's two startups right now that are leading the charge, CRED and BharatPe. Now, they're taking slightly different approaches, which is understandable. They're two very different startups. So let's start off by talking a little bit about CRED and their new service, CRED Mint. This is a service that CRED is going to be offering in partnership with Liquiloans, which is an RBI-certified peer-to-peer lending NBFC. Now, just to explain a little bit about how this works, if you want to lend money using CRED Mint, you can invest anywhere between 1 lakh and 10 lakh rupees at interest rates as high as 9% per annum. Now, peer-to-peer lending historically is a relatively risky business, with default rates as high as 20%. But with CRED, things are a little bit different. They have 7.5 million users on their platform, and all of these people have a credit score higher than 750. This is an exclusive platform, and by making it so exclusive, CRED is actually cutting out a lot of the risk associated with peer-to-peer lending. Now, moving on to BharatPe's peer-to-peer lending service, they're calling this the 12% Club. And as you can probably guess, the reason for that is that lenders on this platform are able to offer loans at interest rates of up to 12% per annum, which is slightly higher than the 9% that they're able to offer loans at on CRED Mint. Now, like with CRED Mint, lenders in the 12% Club can invest up to 10 lakh rupees. That's one similarity between these two platforms. But there's also one key difference. With CRED Mint, individuals are lending to individuals, and that's because CRED is focused on individuals, but BharatPe has always been focused on merchants. They are a digital payments platform specifically built to serve the needs of merchants. And so with the 12% Club, individuals are lending to merchants. And that's one of the ways that BharatPe is actually able to mitigate their risk in this peer-to-peer lending space. So I'm curious to know, if you had, say, 10 lakh lying around, and maybe you do, would you actually be interested in investing it into CRED Mint or the 12% Club to see a return of somewhere between 9 and 12% per year? Or would you maybe invest it in the stock market instead? Let me know what your thoughts are in a comment down below. All right, next up, this video is sponsored by Jungle Ventures. And this week, I wanted to highlight a video that they made specifically for SaaS startups, where they talked about the metrics that SaaS startups need to focus on in order to have a healthy business. Here's a short clip from that video.
The last thing you want is to have what's called a leaky bucket, which is really when all the efforts you spend and all the money you spend acquiring new customers can barely cover for the loss of your existing customers. In addition to that, the predictability of your revenue really depends on how long you can keep your customers active.
So if you found that clip interesting, then you can watch the full video by clicking on the link in the pinned comment and the description down below. Jungle Ventures is one of Southeast Asia's oldest and biggest VC firms, and they've made some pretty noteworthy investments specifically into Indian startups. And a large portion of their portfolio consists of software as a service companies. So they definitely know what they're talking about when it comes to SaaS. And if you're ever planning on raising funds from a firm like Jungle Ventures for your SaaS startup, these are all metrics that they're going to be asking to see before they decide whether or not to invest. So I would highly recommend that you check this video out. And while you're over there on Jungle Ventures YouTube channel, you might as well hit subscribe too, because they post a new video there every single week. And thanks again to Jungle Ventures for sponsoring this video. All right, next up in the news, it is official. Ola Cabs is planning to go public in 2022, followed by Ola Electric, which I think is a little bit of a bold thing for Ola to say, considering the fact that the S1 and S1 Pro haven't even started shipping yet. But I guess barring some catastrophic failure or disaster, these guys are pretty much on a path to success and dominating a large portion of the electric scooter market. So maybe it's not that risky of a thing to say. But while I'm on the topic of Ola Electric, I wanted to highlight this tweet. Someone asked Bhavish Aggarwal, is your own private car a petrol or a diesel or electric? And Bhavish Aggarwal replied, never owned a car till 2 months ago, now a hybrid. Next one will be an electric in 2023. Ola's electric car. Now, obviously, whether or not this actually happens in 2023 will really depend on the success of the S1 and the S1 Pro, but still, I thought it was something worth highlighting, and it's something that I'm personally excited for. I really do want to see more electric cars on the roads of India as soon as possible. All right, next up in the news, last week we talked about how Paytm may have a forgotten co-founder, Ashok Kumar Saxena. And if he's actually found to be the co-founder of Paytm, he may in fact be entitled to a 55% stake in Paytm, which would be a huge deal for the company. It would completely derail their plans to go public, or at the very least have a severely negative impact on these plans. And now the police have actually started a 3-week-long investigation. After this investigation is complete, we'll know whether or not Ashok's claims were unfounded and false, or whether they have merit, and whether or not he's actually going to be able to take action against Paytm. All right, next up in the news, if you've ever used platforms like Upstox, Groww, or Paytm Money, then you've probably seen the option to buy and sell digital gold. This is a 5,000 crore rupee market, but so far it's relatively unregulated. Now, digital gold is the digital equivalent of buying and selling real gold, where you would actually physically handle the gold and then you would probably hand it off to a bank for safekeeping. And with digital gold, it's the same thing. The gold does exist, but it never actually touches your hands. You never see it. It's just stored somewhere on your behalf, and you can buy it and sell it very quickly using just your mobile phone or your computer. However, it looks like the National Stock Exchange is going to be putting a stop to the buying and selling of digital gold on these stockbroking platforms like Paytm Money, Groww, and Upstox. The reason for this is that it actually violates the Securities and Exchange Board of India's rules. Now, people who already have digital gold holdings, according to the National Stock Exchange, don't need to worry. Their holdings are safe. But the only thing is that they're telling these platforms that they can't buy and sell more digital gold after the 10th of September. All right, next up in the news, let's talk about CarTrade hitting the stock market. Things have not gone as well as the company had hoped, especially considering the fact that their IPO went quite well. If you'll remember, CarTrade's IPO issue price was 1,618 rupees, and it was oversubscribed 20.29 times, which probably made CarTrade think that when they actually listed on the stock market, things would go well. But they didn't. They were listed at a 1% discount, and things have gone downhill ever since. Now, some have speculated that this might be a result of that initial euphoria surrounding Indian IPOs in 2021 dissipating slightly. Everybody was so excited for that Zomato IPO, but ever since then, it seems like interest has been steadily waning. And this isn't just something that's happening with CarTrade. There is this profitable pharma company, Nuvoco Vistas, and they listed on the stock exchange at a 15 and 17% discount on the National Stock Exchange and Bombay Stock Exchange, respectively. That is not a great public response, and unfortunately, it seems like this might be a trend. All right, moving on to some acquisition news now. Indian logistics unicorn Delhivery has acquired Bengaluru-based Spoton Logistics. Now, the size of this deal is undisclosed, but according to the Economic Times, it might be somewhere in the ballpark of $300 million. Spoton Logistics was founded in 2012 and currently has a logistics network spanning 300 locations and 22,000 PIN codes. So they've got a pretty solid network, and by acquiring them, Delhivery will be increasing their network size as well as acquiring new customers. This news is also coming to us in the months leading up to Delhivery's IPO. They're planning on going public in the first half of 2022, and through this IPO, they're hoping to raise $500 million. All right, moving on to some funding news now. This one is a little bit old at this point, but we didn't get a chance to talk about it last week, so we thought we would talk about it this week. India has a new startup unicorn, B2B manufacturing marketplace, Zetwerk. They raised $150 million in a funding round led by D1 Capital Partners at a $1.33 billion valuation, which is a 2x increase from their between $600 and $700 million valuation in February of 2021. So Zetwerk was founded in 2018, and what they do in a nutshell is they connect original equipment manufacturers, that's OEMs, and engineering procurement construction companies, that's EPCs, with small and medium-sized businesses that want to buy custom-made products manufactured on demand. They're going to be using these fresh funds to strengthen their technology platform, continue their international expansion, and also strengthen their position in the consumer and industrial manufacturing space. All right, next up in the funding news, digital bookkeeping platform Khatabook has raised $100 million in a funding round led by Tribe Capital and More Strategic Ventures at a $600 million valuation. Besides this, they've also announced an ESOP buyback worth $10 million in an effort to reward the employees who have stuck with them for a long time. Khatabook currently has more than 40 million registered businesses on their platform, 10 million of which are monthly active users, and they're going to be using these fresh funds to hire more talent and to monetize their platform by incorporating financial services like payments and lending. All right, next up in the funding news, Curefoods, which is the parent company of cloud kitchen brand EatFit, has raised $13 million in a funding round led by Iron Pillar. Curefoods was spun off from CultFit in 2020 and currently has more than 25 cloud kitchens across 4 Indian cities. Curefoods currently operates food brands like EatFit, Yumlane, Aligarh House of Biryani, and Masala Box, and they're going to be using these fresh funds to acquire even more digital-first food brands and expand to 8 Indian cities in the next 12 months. All right, that is all the startup news that I have for you guys this week. I really hope that you enjoyed the video. I hope that you learned something, and if you did, it would mean a lot to us if you could hit the like button. And also, if you haven't already, now would be a great time to subscribe because we post new videos every single week about Indian startups, entrepreneurs, and the latest news. Also, big thanks to all of our Backstage with Millionaires members, our unicorns, our decacorns, and our hectacorns. We have a new hectacorn this week. Karthik, thank you so much for your massive financial support. It really means a lot to us, and I hope to express that to you in a more personal way during our upcoming conference call. We're gonna be making a hectacorn-only community post, so keep your eyes open for that. We're gonna be using that post to kind of confirm and settle on a timing for all of you guys that works, so that we can all get on a conference call together and meet each other and talk about Backstage with Millionaires and the direction that it's taking. So I am really looking forward to that. But even if you can't afford to financially support what we do here, just the fact that you made it this far in the video, the fact that you watched it to the end is plenty of help. So thank you guys so much for watching this episode of Backstage with Millionaires, and I will see you in the next one.